Hey guys, this is HTrade and we took another fabulous profit trade today. We just keep on winning on Fridays. It's absolutely insane. So the owner of Wesley Trades HQ, which is Wes himself, I just wish you guys can just join me in the live sessions that we have, the live trading sessions. It's absolutely insane. The live stream. Here we go. Wesley stream. So we usually hold the live stream at 9:15 a.m. EST, which is New York time, right? So yeah, it's you guys need to join to be able to live how good it is. It's absolutely insane. So yeah, profits made all around, as you can see, even from our members, profits made all around. I took a different trade at the beginning of New York Open. I made my profit. It's just profit made all over the place. So yeah, the link to the Discord for Wesley Trades HQ will be in the description below, as well as a discount, what do you call it, the discount code for alpha futures will be below in this video as well, and also the link to the Wesley Trades social channels. But let me just quickly go to the socials, right? So here's the latest X post, here's the latest TikTok post, but more importantly, the YouTube post as well. Like every single day that we take trades, we Wes posts every single one of them, and it's amazing. You guys need to just follow it, and you will see how good it's just better. It just gets better and better and better. Any case, I'm gonna stop myself here. So let me show you guys what happened today. Just a quick trade recap. So I made $364.50, and we are literally $500 away from passing the evaluation to get 50k funded. Very, very cool. All right, so let me show you guys how my day went. All right, so I have literally nothing on my charts. I literally deleted everything except for the indicators. The indicators is just there to show me the session times and the fair value gaps. Basically, that's literally it. And this thingy, that's it. Oh yeah, and big volume orders from institutions at that moment in time. If there's large volume orders, like during New York Open or during a news event, then this indicator shows me where those orders are. Now, the reason why I want to see that is because we, as you can see, big orders, price went up, went all the way down to tap into this liquidity that was created during this move, and then it used that move for fuel at the end of the day. In any case, besides the point, let's get started. So I'm simply going to go to the daily chart, and then I'm going to delete today's candle. Easy as that. I would want to show you this because I want to show you my process. Very easy. This is my how-to guide, how I follow NAS 100. So I start on the daily time frame. The daily, the weekly, you name it. Well, the weekly didn't show me much today, really. All we need to know is that we're literally moving inside this inverted fair value gap here on the weekly. And we started having some form of a reaction from it, and then eventually we went up as well. So this is one, remember, this is one full week's candle, right? So Monday, Tuesday, Wednesday, Thursday, Friday. So in the beginning we went down and then we went up. Basically, that's what's happening. Long story short, let me just not get off the point here. So this was yesterday's candle, which is Thursday. What I normally like to mark out for liquidity is the following. Previous day high and low, but not only that. Okay, let's do this. PDH and PDL. I not only do this, I do this as well. So I mark out the body high. I just call it daily liquidity. Body low, daily liquidity. Body of the candle. You will, the moment that you guys see how important it is to mark out the body high and low of these candles, you will notice where liquidity lies. I'm not joking with you guys. Any case, besides the point. So let's just paint the story. What happened during this week so far? On Monday, we retraced into this daily fair value gap. And what happened? Yes, we ended with a bearish daily candle, but we closed above this daily fair value gap. Next day, we expanded. We literally took out the low of the previous day's candle and we used that as fuel and we moved up. That's it. That's all that happened. That's it. So what happened the next day? We went down again, well, pretty far. Where did we go down to? Come on now. How many times do I need to explain that I like marking out the body high and low of a daily candle? Why? Why? Do you see this? Do you see where it came to? This was during a news event, by the way. This was during an unplanned news event. And then what happened? Price retraced all the way back up again. I profited with that move going up on Wednesday. That was a beautiful move. Any case, so which other levels do I mark out for myself? Here is a daily inverted fair value gap. So not only did we retrace back into this daily fair value gap here on Wednesday, we retraced to the body low of the Tuesday candle and we went up, right, to back above the Tuesday high. So basically, what happened Thursday? We took this liquidity of the previous day and we had basically a bearish day on Thursday, but we ended on a high basically. It's because the body of the sell candle wasn't that big, so it didn't indicate that there's a lot of sell volume in that day. This is all buyer volume. Any case, so but take a look to the left. So we ended here, but where did we go to? Take a look at this liquidity levels here as well. Wicks. I'm going to start drawing this liquidity there and I'm going to extend it. I'm going to extend it to here. This is all liquidity, everything. And this is a daily, another daily bearish FEG. All right, so I just marked this out as a point of reference. This is liquidity. This is previous day high. So now let's get started. Let's move on to the day. Basically this is the New York session of Thursday. Any case, so let's just keep an eye on where price is going. Right, so let's get started. So I'm going to play the 1 minute candles. There's the start of Asian time frame. So what did we do? We broke out of the previous day's body high. There we go. This candle here, right? We broke out of that. We went all the way up. So this is all still Asian time frame. Still Asian time frame. Okay, take a look at this daily candle. See how it moves. And we took out the previous daily high. All right. So around about that time, I'm not going to stick to 1 minute the whole time now. Around about that time, I was awake and I was waiting for a trade setup, but I couldn't really see anything here. This is just one pure bullish momentum move. But what did we do? So we took out the previous daily high. So there's a possibility, there's always a possibility if you take out a previous day high or low, there's a possibility that price may retrace. All right, not always, but sometimes. So we are at a current high level in some way, but we are also at another daily turning point. You see this is a daily turning point here. Price went down. This is another daily turning point here. Turned here again. And these areas are areas of liquidity, basically, at the top and the bottom of these turning points. You see these wicks. This is liquid. This is the liquidity that I'm talking about. What did we do? We literally took out the daily high, previous daily high. We tapped into this liquidity pool once again, right? So on the 15-minute, what am I looking for if I want to look for a trade? I like to use an inverted fair value gap. And wouldn't you believe it, during the beginning of London time frame, after we took out the previous daily high, we created an inverted fair value gap. And at that point in time, I was busy with work and I didn't see this. Let me just show you guys what happened. So an inverted fair value gap is an indication for me that that trend on that time frame is possibly turning. And if it happens at a significant higher time frame level like it is now, previous daily high, there's a possibility that we might get a reversal because price went up, price went down, closed below this inverted fair value gap, but I didn't trust that inverted fair value gap yet, because if you take a look at the 15-minute time frame, what do you see? This whole movement is still bullish. So let me show you. Price went up, price went down, price went up, price went down, price went up, price went down, price went up. You see where we are right now, right? So I was skeptical. I was very skeptical. In any case, let's just move forward. Price went up to this inverted fair value gap once again. We didn't tap it, but we went very, very close. And then we made this is the first sign for me that there's a possibility that the 15-minute time frame trend might change. That when this 15-minute candle was printed. All right. So now, like I said, I was too late. I was too late for this trade. I didn't catch it. I didn't catch it. So price went up again, tapped this inverted fair value gap once again. Not only that, we tapped the previous day high once again. So let's stack the confluences, right? So price went up, price went down, price went up, price went down, price went up, price went down. We created a what? A new lower low turning point on the 15-minute time frame. Confluence number 1. Confluence number 2, we have a 15-minute inverted fair value gap. Confluence number 3, we took out the previous daily high. Confluence number 4, we have a fib retrace into premium, the level between the 50 and the 61.8%. And wouldn't you believe it, what happened next? Let me show you what happened next. That's what happened next. That's why I kicked myself. So once you guys learn to stack your confluences for your trades and properly wait for the trend to change, then you will catch these kinds of moves. This was a beautiful move. And it's not only one confluence, it's not only two confluences, it's not only three confluences, it's 4 confluences. We went back to tap the previous day high again, and then we went down. We not only did we create this inverted fair value gap, we actually tested it twice before it went down. So yeah, that was literally a move that I missed this morning. You know what I did? I was looking for a buy, because at this point in time, while price was reacting here in this location, I was looking for a buy, and I actually got a stop out during this move. I lost, I think, 250. I think it was, I lost 250 plus minus. Any case, let's move forward. So now, where are we right now? Close to New York Open, right? 9 a.m. EST. So, but where did we fall to? Why did price fall to this level specifically? Now I'm going to tell you, if you can go to the higher time frame to actually get that answer. Let me show you. This is the 1 hour time frame. Let's go down to 4 hour. 1 hour. Let's go to 1 hour. I think this is going to be a better picture there. All right. You see this move? Up, down, up, down, up, down. All right. This move there is that sell-off. So at that point in time, this was a liquidity grab, basically. The reason why I call it as a liquidity grab is let's pull out our Fibonacci tool once again. Let me just quickly delete this, right? We're done with that move. I'm going to take this Fibonacci tool. I'm going to stick it to this bottom here. I'm going to stick it to this high here, because we're looking for a buy. Everything is still bullish. I mean, yes, it fell to here, but for what goal? And wouldn't you know to which level did this fall to? Between the 50% and 61.8% level. And that is when I knew we are going to start retracing up, which start going up. And I wanted my entry for that trade during this move here. But I did not get my entry. I was so pissed off. Seriously. So this was 9:30. Beginning of 9:30. Here we go. We already have our 15-minute inverted fair value gap. All right. And then I waited. Let's just watch this on the 5-minute time frame. This is going to make much more sense now. So we've stacked our confluences. We're already looking for a buy. Because why? We retraced back to a 61.8% fib level. Not only that, let's take a look here on the 4-hour time frame. we tapped a 4-hour fair value gap as well. Here we go. This one, this huge fair value gap here. This is a 4-hour fair value gap. That we also tapped. In line with this 15-minute inverted fair value gap. That's why price reacted so hard from this level. Well, one of the confluences, at least. Right? So let's just see what happened during New York Open. Boom. There we go. I waited for a retrace back into this to get a buy to take my profit here or here, which is the London high, and I didn't get it. I was so pissed off. Seriously, I was pissed off. Take a look at the 1 minute time frame. There's no breaks, yo, during this move. No retracement whatsoever. The only retracement that we got was this one, and this is where I took my buy. I took my buy at this level. There we go. All right. So why did I take my buy here? Because this was the first retracement into a 1 minute fair value gap. And my stop loss was either here or I think it was 40 points. I can't remember exactly how much points. But my TP level was this 25%. I think it was this 25% level, yeah. Wait, did I get stopped out? That's a possibility. So I got stopped out during London with a small amount. I got stopped out here as well. And then I think I waited for another entry. I did make a profit. I'll show you guys now in a moment. We actually went back down to test this 15-minute inverted fair value gap and this 4-hour fair value gap again, which was absolutely insane. And then I saw something magical here happening. Let me just quickly delete this fib tool because I'm going to take out my fib tool. And I'm going to draw a new fib tool. Why? Because like I said, guys, in my previous videos, investors, big institutions that likes to trade the market with big volume, they make use of a Fibonacci tool and they love buying in discount or selling in premium. This is a discount level. Not only is this a discount level, it's a 4-hour fair value gap and it's a 15-minute inverted fair value gap. So confluence number 1, we tapped into this level here. Confluence number 2, we tapped into this level here. Confluence number 3, we tapped into this level here. We're bullish, 100%. So what happened next? I took my buy, I think, from here. Let me just quickly check, see where I took my buy from. During this move up. Yes, 945. So 945. During this move. There we go. This was my entry. I think this was my entry. My stop loss was here, I think. And my TP was, my initial TP was there. But I was eyeing a specific level, this level here, that level. That's another London high of a different day, 12th November. All right. And as you can see, boom, there we go. I closed my trade around here. There we go. You see, 25,798, 25,798 during this move here. I closed my trade. And that was so beautiful. Beautiful, beautiful, beautiful. So Let's just quickly see what happened next. We go back to the daily time frame here. We were eyeing this daily fair value gap as well because it's a very high confluence. We took out this high, and wouldn't you know what happened after we took this high? Let's see what happened. Price went up a little bit, and we started retracing. Not only did we start retracing, we created a inverted fair value gap. We tapped that inverted fair value gap. Let's just follow price, right? Went back down again. So if you would have taken this trade, you would have had, I think, we created the inverted fair value gap. We closed below it here the first time. We closed above it here, but we went down. All right, let me just quickly see where exactly was the, there we go, this move. Check this out. What am I saying? Let me just move forward. And let's have a look. That was the move. This was the proper CE entry. Okay, why? Because why didn't we get into this trade or into this trade? Because it printed a bullish candle, bullish candle, bullish candle. No entry. So we went down again. We printed a bullish candle, bullish candle, bullish candle. We went through it again. Third time we went down. Here we created an inverted fair value gap. Here and there, very small one. In this case, we closed below the inverted fair value. We closed below this bullish fair value gap, turning it into a sell inverted fair value gap, right? We went one candle up, one bullish candle up, testing this area, CE. And we printed a new bearish candle, and boom, there's your trade. You could have taken your stop loss here or here or here, for instance, and take it 1 to 2 risk to reward, or 1 to 1.5, and it just ripped down. Because why? Like I said, what is the other higher time frame confluence that we tapped? We tapped another day. We took out another daily high on this turning point here. Here it is. And that was beautiful. We went up. We were dancing on that line. We went down, close below it, retested that line. If you want to take like support resistance wise, right? This is a support and a resistance area now. Right? Retested it and it sold off. Boom. There we go. Beautiful trade. And that was it. This was for me the best. These were the best moves for me for the day, I would say. This move here. This move, yes. But we made a retracement, yes, as well. You could have had plenty. I mean, even if you took this stop loss, this would have been a take profit. This would have been a take profit. You understand? So there's multiple CE trades. So I'm telling you guys, this CE entry model is very nice. I don't know how to, you know what, let me show you guys. So if I go to Discord, right? So now, in the announcement section, so I make an announcement every single day, right? Now, let me show you guys how you can learn this strategy. So under Wes's live stream trading strategy, under the edu file section here, under support, on the Wesley Trades HQ Discord, edu files, support, you can take a look under the 22nd of October, 2025. Yes, here's the video, right? So let me quickly show you guys a part of the video, right? Okay, cool. Hold on quickly.
The video you guys are about to watch is of me and my strategy recorded yesterday. I'm recording this today and doing a little bit of an intro because today I actually passed my eval. So there's a little bit of evidence that this strategy actually does work. But other than that, please make sure you have some notes, whether you're typing them out, writing them out, whatever. Just make sure to not let this sauce slip by. Enjoy the video, guys. All right, what's up, YouTube? Today, unfortunately, the Amazon Web Services servers are down. So there's no trading. We unfortunately...
All right, let's move forward a little bit. Cool. So as you can see, this section is about the 9-step plan, and it explains to you exactly the amount of steps we follow for this strategy. Higher time frame analysis, SMTs, session highs and lows, and then we go down to the lower time frame, and then you take a look at the inverted fair value gaps, normal fair value gaps, session, yeah, like I said, session highs and lows, etc., etc. And then he breaks down an example, and then he just goes from there. So yeah, this is a 28-minute video on the whole strategy. So now, when I go back to the edu file section, there on the 27th of October, there is, let me just go back to the 22nd, 27th of October, there's a full PDF document on exactly what was explained inside the YouTube video is explained here as well. So yeah, join me, guys. Join me at Wesley Trades HQ and come and have fun with us. And yeah, let's learn together. Any case, that's it from me, really. My results is pretty good so far. I'm literally $500 away from being funded, and this is the breakdown video that I'm making to be posted here as well. Here's another breakdown video that I did for this previous trade. And eventually, here's another breakdown video that I did for the previous trade. So all the trades that I take, everything is documented in this YouTube channel, Road to Futures. Right, so this is my journey of moving forward to get a funded account to basically just get funded, to get a funding account and to get payouts of that account, to basically start making money out of these futures accounts. And this is only the beginning, guys. This is literally only the beginning. So yeah, let's see how it goes to the future. All right, hope you guys have a great weekend. Cheers.